Hi everyone, my name is Clendon. I'm the product manager at Sharesight. I just thought I'd spend a quarter of an hour or so taking you through our FIF report, the Foreign Investment Fund report, which many of you might find useful at tax time. So who does this apply to? Well, Kiwis who have investments offshore, so any fund really offshore that's is classified as a foreign investment fund. And if you end up with 50,000 more in assets in these foreign investments, you will be subject to the FIF regime. Now, tax time is coming up in a few days, and so many of you will be looking to use this report now. So before I get started, I just want to mention that please have a read of the disclaimer that you'll see on screen briefly. I'm not a tax advisor, I'm not an accountant, so I'm really just here to run you through how our tool works. Now, a little background to Sharesight. For those of you who don't know, Sharesight was actually a company founded in New Zealand back in 2007, and it was father and son company from the start, where Tony Roburn, one of the founders of Sharesight, tracked all his investments in spreadsheets, and his son Scott thought there must be a better way to do this. So between the two of them, they really came up with the idea and concept of Sharesight as being basically solving a problem for DIY investors. How to track your performance in a way that's a bit more simple to use than spreadsheets. And flowing on from that, because Sharesight ends up holding so much data, your financial data around your investments, your dividends and all your assets, it naturally followed that we started to develop tax tools. So we have a taxable income report, and we have this FIF report, we have a trader's tax report, and that simply came about because we have all the data available that allows us to build these reports, and the FIF being a rather complicated report is really only possible because of that data we have. So we are going to jump to the FIF report. So you can find it under reports and FIF report. Now, by default, you'll see the financial year selected as 2021. So that's the year ending, financial year ending March 31st, 2021. Now, the first part of the report essentially gives you a snapshot of all your investments. And by default, we will select the investments that we believe do fall under the FIF regime. What you'll see here on my screen is Cochlear Limited is unselected now, and so is Westbank Banking Corporation. These are two ASX listed instruments that actually are part of what's called the exclusions list. So while they're foreign investments, they don't form part of they're excluded from the FIF regime. And the reason for that is typical investments on the listed on the ASX have the same sort of imputation regime or franking regime as New Zealand. And so therefore, you essentially do pay tax on the dividends issued by those companies. And the FIF regime is all the reason that sort of exists is to ensure that those with foreign investments, Kiwis with foreign investments, do pay tax, their fair share of tax. And many countries, in fact, most countries don't have an imputation regime. And therefore, there's less incentive for foreign companies to pay dividends. And so as a result, the primary method of collecting tax through investments, through dividends in New Zealand is not really available for foreign investments, and that's really why the FIF regime is in place in the first instance. So the first screen just lists the companies. Now, to see whether you actually classify and fall under the FIF regime, that the first thing you need to do is just hit this calculate button. Now, what this will do is actually calculate what we call essentially the peak balance at cost of all your investments. And if you're over $50,000, then you are subject to the FIF regime. So as it turns out in my demo portfolio here, $170,278. So you'll see that we default, my account has been defaulted, my portfolio to, I am part of I do fall under the FIF regime. Now we can link through to the trades and to see what's actually going on and how that peak balance is calculated. Also, you can run your eye down and just check that our default list of FIF included companies is in fact correct. From time to time, you will see that there is one of your companies will be listed on our as been included in the FIF regime that you believe is not should not be included in the FIF regime, or vice versa. We do our best endeavours to pre-populate the company subject to the FIF regime, but we occasionally do need to make changes. So please let us know if you think a company is included or excluded when you think it shouldn't be. But as it looks here, if I run my eye down, I'm pretty happy that all of these companies are subject to the FIF regime. And so I'm going to move on to the next step. And I'm just going to hit calculate. And what this will do is it is going to calculate my FIF income based on two available methods. So the two methods we calculate for you are what's called the fair dividend rate method, and the other one is the comparative value method. Now, in most cases, individuals or family trusts are permitted to use the lower of the two income method calculations. And what I'm going to do now is basically just spend a bit of time talking about what these methods are about. So I'm going to hop into the view details on the foreign investment fund income. Now, the fair dividend rate method is really all about just getting the fair dividend rate for these companies if in fact they were to issue dividends. We want to generate a sort of essentially like an income for that company. The reason why 5% is chosen is that's generally around roughly the dividend, how much typical New Zealand companies would issue in dividends. 5% of their value would be in dividends. So 5% of the value of the company would be paid to you in dividends each year. So here we can see all the companies that I've selected in my FIF regime. We have the opening balance value. Now you take 5% of the opening balance, so you can quickly see here you've got an opening balance value, and it sums to 12,698. However, there are another couple of complications to calculating your fair dividend rate method, and that's where you have investments that basically you purchase and then sell during the year. So in order to determine to take into account these investments that sometimes you had no holdings at the start of the year and no holdings at the end of the year, then we need to use to calculate peak holding gain and what we call the quick sales gain. Now, you can take the smaller of those two values when you get your total income for the year. I'm just going to hop into just one of these companies, for example, Google. Now, Google, here you can see that we've got some information. I won't dive into all the detail here, but essentially you've got a peak holding calculation, which basically takes your 20 units, gets the average cost, and it applies a 5% rate on that to give you a peak holding gain of $2,665. And then it also goes through a quick sales calculation as well. And in this case, it ends up with a quick sale. It is basically, it just takes the total amount derived from your quick sales. So you purchase some stock, you sell it. What is your profit on that? So those are the two methods. And if we just jump back to the FDR, you can see here that we tally those values up, and then our overall income for the year is essentially tallying up the fair dividend rate methods plus any of these adjustments where you've had either peak holding or quick sale gains. So it gives you a total income of 17,820. Now we're going to jump back to the previous page where you can see the comparative value method. Now, all of the stuff, the fair dividend rate and the comparative value, we've got some quite in-depth help docs. So just help.sharesight.com, and you can just type in FIF and you'll see all of our help articles detailing this. We've also had previous blog articles in the past around how we how to use this FIF tool. So next we're going to have a look at the comparative value method, and you'll see that the actual the income from the comparative value method is obviously a lot greater in this example that I've got put together. And without sort of labouring the point, you can see some of the workings here. And if you want to dive in deeper, you can click on the worksheets for each of those instruments. But we basically need to take into account your ultimately, we're just trying to work out the full returns, basically, including your capital gains and dividends. And we end up with an income for each of your investments. And in this case, the income is much higher than the FDR method. So as a result, if I hop back again, picking between the two, it's obviously pretty clear that you'd want to choose the FDR method. Now, once you've had a chance, actually, one thing worth mentioning too is there are sometimes there will be scenarios where you can actually claim some tax back on that you've actually paid against these investments. Now I'm going to just click into one example to actually work through the how much you can claim back. You have to actually take into a number of factors, including the net holding income. And basically, you end up in a situation where you can only claim back a certain amount of tax per holding based on how much income that came from that holding. So you can't kind of claim back more tax than was actually generated, than income you received from that individual holding. Now, we have some tooltips explaining kind of each of these steps along the way, and also sort of some qualifiers with this tax paid tool. There are some other things that have to be factored into this situation, such as double taxation agreements. But in a general sense, and this gives you a fairly good detailed sort of way of understanding what your claimable tax might be per investment. So finally, when we hop back to the previous screen, so we've run through the fair dividend rate, we've run through the comparative value. There was a lot of help docs explaining those different methods and some of the detail around that. But ultimately, you've really got your fair dividend, your foreign investment income. Using my example, is essentially going to be $17,938.21, and there's a lot of calculations behind that. So it's quite hard to use. It's quite hard to complete your FIF return without using a tool as such as Sharesight to get that figure. Now, from here, this will obviously become relevant at tax time using this tool. So there's a couple of options for you. For those of you who use an accountant to complete your tax return, you can share your portfolio with your accountant, and they can actually run this report themselves. Now, to do that, you click on settings under the portfolio and portfolio sharing, and you can enter the accountant's address and share them access, either read-only or full admin access. The other option is you can actually download the FIF report, and when you do download that, we've got we download the entire sort of data set, so your accountant can actually take that data set and actually put it into their own systems, and as preparation for submitting your tax return. In addition, there are other aspects that might be applicable to you, your overall tax situation, information that's outside of Sharesight. So it might be it's likely that the accountant will need to just take the FIF income as part of the overall, your overall sort of tax situation. For those of you who are completing the FIF or your tax return yourself, you can run this report and have it sort of ready at hand, both the spreadsheets or just the values on the screen, and you can use that when you're actually going through your tax return with the ID. So yeah, there's a few ways you can use this tool. And I hope this has shed a little bit of light on the different options available and some of the calculations behind the scenes. And do bear in mind as well that the tool really is only as useful as the data that goes into your portfolio. So to make the tool valuable and worthwhile, you do need to make sure you have all your trades and all your income loaded up in Sharesight. So thanks for listening. That kind of wraps up my little show and tell around our FIF report. Just a few things to note. This report is available on our expert plan. If you have any further questions about the report, I've already touched on the help site, but you also can message us directly at support@sharesight.com. You can use our in-app, our little widget, to send us a message directly. You can also reach out on our Sharesight community forum and post any questions you have, and other Sharesight users might be able to help, or if you have some good tips on how to use the tool, then please do jump on the forum and post your suggestions.